Hello traders, Nick Shaheen here looking at Home Depot. They reported earnings and they kind of missed, and more importantly they guided lower. They blamed tariffs. They're saying that the consumer is pinched and they want to update their sales because they think that once the consumer gets pinched they're going to spend less at their stores. So that was the reason they guided lower, the way I understood it. So what happened to the stock? It spiked. So it's up 4 and change on a down day in the markets. In a pivotal week, we have some Fed events. So pretty impressive that it rallied big time on big volume in the face of bad news. So as they say, if that happens, that means the bears for Home Depot are kind of tired. Otherwise, they would have beat it down. So, especially that it has an open gap below and a setup for a debacle towards this point of control. Now this is a daily candle, daily chart, so about a year's worth of candles. Yeah, there's a year. And there is stuff I can discern from this action. So right away you can see a third poke at a high. And I would say 4. Really, this is pretty close. So when was that? This was September, October. So this was the October disaster from last year. Remember, the whole market fell into a Christmas crash? This is Home Depot's above it, but emphatic saying, I'm here, I belong here. So shorting it from here all by itself is kind of tough. I know they say there are no triple tops, no idea what they mean by that, but this is a third poke, whether it's actually a top or a precursor to higher prices. Now, for that to happen, I bet it would need the rest of the markets to be okay at least. So meandering markets or rising markets would help. Crashing markets would definitely put the kibosh on this one. So I had this range already painted in Home Depot, and this is definitely a break and close above it. A close above this prior fail. So onus is on the bulls, the Home Depot bulls, to prove that they can use that as floor. You know, closing above it is one thing, and using it as a floor for higher prices like they did here is something else. So it's same here. You know, they went above a neckline, and then onus was on the bulls to prove that they can use it as support, and they did. Look at the rally that ensued. So what now? I probably would need to get up to a weekly chart for less noise. All right. So there could be some stuff already in progress. What does that mean? This breakout depends on where somebody draws a line. I'm not a technical analyst, but I do play one on TV every once in a while. So, but my what I see is, what machines may have already seen, is this one right here, this purple line here, a perfect neckline for whatever cup and handle ish pattern, and they say usually the rally is as big as the stomach of the cup, which actually is not here. So this would be it, all of this. I usually look left and say, okay, there might be some stalls along the line. And in fact, I could probably argue that you can do the same along a couple of lines. Like this is another one right here, this orange, this purple line as well. So we have 2 breakouts pointing to the same region, regardless of where you draw the line, from here or from here. It should be headed higher. So now you add to it this break line right here. So if I want a horizontal line, the easy one is 220, but there are other ones inside of that. So if I go back to, come on, do it. There we go. To the daily. So there might be some other stuff. A pattern, some sort of a wedge, flag, whatever you want to call it, megaphone, sousaphone, whatever. There's a neckline that's being attacked and a range that's being well defined. You know, simply put, there could be something like this going on. 3 pushes, ABCs, whatever. This was push number 1, a fade or a consolidation, and then getting ready for push number 2, as long as you hold some sort of level. And if I look, this level right there, the 50 is about the 50% of this side. So Fibonacci fans like that. It's nice and neat. Machines like that. It's nice and neat. And they're back to the neckline. So a better neckline would be 217, 218, an easy round number, 220 plus. So on up day for the markets. Let's say we get one this week. If Home Depot hits 220, then the machines will pick it up. They like to buy high and sell higher. So the momentum trade will still be on. So the least I can do is not fade it if I'm, let's put it this way. There are easier things to short if I'm a bear looking for stuff to short than Home Depot. I guess that's probably the best conclusion right here, with some upside potential. And if I'm long, I don't have any reasons to get out of it, especially if my long potential was for the long term in Home Depot. If I was long just for a scalp, then I should have scalped already today. All right, because this is a prior fail. Nick signing out.